Welcome to you all. Thank you so much for joining us today at our accounts webinar. And really, as the title suggests, it's really about getting your charity accounts right and really focusing on the needs and the requirements for smaller charities in particular. So you're all very welcome. So let's do introductions so you know who we all are. I'm Laura Anderson. I'm OSCR's Senior Manager for Higher Risk Cases and Quality Assurance, and part of my role involves looking after many things that are to do with charity accounts and the annual return process. I'm going to ask my colleagues Claire Morrison and Alison Adams to introduce themselves in turn. Claire?
Thanks, Laura. I am Claire Morrison and I am the Senior Manager of Policy and Sector Improvement. I previously worked in the accounts section of OSCR as the Accounts and Annual Returns Manager, and I was quite heavily involved in the new trustee database and publishing of accounts, so I'll be able to talk to you about that as well. And I'll pass over to Alison.
Good afternoon, everyone. I'm Alison Adams. I'm the Accounts and Annual Returns Officer at OSCR. So I answer queries on accounts, do accounts reviews and provide guidance to charities. So you may well have received an email in the past from myself.
Claire, Alison, thank you very much indeed. Okay, let's try and make a start then. And my first technical challenge of today is going to be to try and share the slides for us all to see. So let's see how we go here. Okay, so I'm hoping that you can all see the slides. Can someone give me a thumbs up if, Alison, can you give me a thumbs up if you can see these okay? Because I can see you on my screen, but nobody else.
Yes, I can see them okay.
Great, thank you so much. Thank you, folks. Okay, so let's make a bit of a start. Let's move us on to the first slide. If my mouse will work here. Okay, there we are. Okay, so 4 key areas that we're going to cover in the webinar today. Firstly, we're going to touch on a brief outline of what charities are actually required to submit to OSCR every year. What is it that we're looking for from you each year? Then we're going to go on and explain the requirements in terms of the annual return process, the types of questions that you would be asked when you're going through the annual return process, and the information that you'll also need to provide when completing that. Then we're going to go on and cover the requirements for a set of receipts and payments accounts in particular, and how to ensure that these are correct before you try and file them with us. We're then going to round off with talking about future publication of accounts and key areas for you to consider in preparation for that change, which is coming up very soon indeed. Now, I'm conscious that I can see a number of people who've got their hands up, and I'm hoping that that was a point at which I'd ask you to kind of indicate if you could see my slides okay. If that's why you put your hand up to begin with, grateful if you can just take it down, because otherwise I'm not sure if perhaps you're asking to come in for a question or not. And I can see those hands disappearing now, so thank you for that. Right, let's move on with these slides. So, first of all, what do you actually need to submit to us? Okay, every year, you're required as a charity to complete the OSCR Online annual return, which asks you to complete some questions about the charity itself. With the annual return, the charity has to upload also a set of its annual accounts for the year, and that will need to include a trustee's annual report, financial information, and the external scrutiny report, and that will be the report from either your independent examiner or your auditor. The annual accounts have to be filed with us within 9 months of the financial year end of the charity. So if your financial year end is the 31st of March, you have to file your accounts with us by the 31st of December. That's actually a legal requirement. It's set out in law, and OSCR doesn't have discretion to vary that no matter what the situation. The law says 9 months, and it doesn't provide discretion for us to change that. That means that it's really important that you start to consider as early as possible after the year end to allow you to complete everything in good time for your filing deadline. Now, the OSCR annual return is actually accessed through the OSCR website, and there can be up to 3 users registered for OSCR Online for each charity, and a person can be a user for more than one charity, and quite often we see that that is exactly the case. Each user will log in to OSCR Online with an email and a password that can then be used to access the charity to which they're actually connected and registered for. The annual return's ready to complete immediately after the charity's year end, but you should wait until the charity's accounts have been finalised before trying to complete the annual return, because some of the questions on the annual return relate to information which is in your accounts, for example, your total income figure. There are 3 sections of questions on the annual return, sections A, B and C. Section A asks some initial questions about the charity. Those include asking about the number of charity trustees, the numbers of employees and volunteers that the charity has at its financial year end, and it also asks some questions about the charity's banking arrangements. Section B looks a bit more at the charity's finances. It asks about the income and expenditure of the charity and the type of accounts that the charity has prepared, and we'll talk about the 2 different types of accounts later on in the presentation. There are also in section B some follow-up questions about the assets of the charity, and those questions will differ depending on the type of accounts that the charity is actually completing and which they've indicated on the appropriate question in section B. Section C asks a bit more about what the charity actually does and how the charity is run. So it asks questions, for instance, about the governing document and when it was last reviewed. It also asks questions about the charity trustees, including whether the charity is operating with the minimum number of trustees, whether there are appropriate induction procedures for trustees, and whether any trustees have been remunerated for their role in the year. And all of that information helps us as OSCR, as the regulator, to understand much more about how the charity is actually functioning so that we can provide some help to the charity if that's actually needed. If a charity operates overseas, because we have indicating questions on our system about areas of operation for a charity, they'll then be asked some additional questions about how they operate overseas. Now, the annual return should be easy to complete for someone who has a really good knowledge about the charity. And it's important that if a third party, such as an accountant, for instance, is asked to complete the annual return on behalf of the trustees, that they work very closely with the trustees to answer the specific questions about the charity's governance to make sure they're answered correctly. Now, in the process of completing the questions, there are messages that might pop up on the screen during the completion. Those are there to help ensure that you complete the questions correctly. There's also guidance to help you understand more about what each question means as you go through. And those guidance icons can be accessed by clicking on the icon next to the actual question itself. Now, it's important to make sure that you check all your login details are working correctly in advance of the submission deadline, because that will ensure that you allow sufficient time to ensure you can log in correctly and contact us in advance if there are any issues that we need to help you sort out. For annual returns for the year ended the 30th of June 2025 and thereafter, information is also required about the charity trustees. That will need to be submitted through the annual return. The charity trustee information is submitted through OSCR Online, and we ask for 6 pieces of information for each charity trustee. We ask for their name, their address, that's a personal contact address, their telephone number and email address, the date of birth for that individual, and the date that they were appointed as a charity trustee. Now, that information can be entered into the system by any of the charity users. And it's important that when preparing for the annual return submission, that you ensure you have that information to hand ready to submit. The charity trustee information can be completed at any time, not just when the charity is actually completing its annual return. And we would recommend that you complete that information about charity trustees as soon as possible, particularly because we'll be publishing some of this information very soon, and Claire's going to say a little bit more about that later on. So let's move on. Let's look at the legislative requirements for charities and their accounts in Scotland. These are set out in law. So there are 2 main pieces of legislation and a further document that's really important here. The first thing to mention is the Charities and Trustee Investment Scotland Act 2005. That's the main piece of legislation for charities in Scotland. It sets out requirements for accounts, but also for a whole bunch of other things about how charities need to operate. In terms of what it says about accounts, it sets out requirements for charities to keep proper accounting records, to prepare an annual statement of accounts, and that has to be independently examined or audited, and to submit these items to OSCR. The 2005 Act also includes the requirement to complete and submit the annual return to OSCR. The main piece of secondary legislation, that's the second item on the screen, that's the Charities Accounts Scotland Regulations 2006, and it's got as amended in brackets because those regulations have been amended on multiple occasions since they were first created in 2006. They set out the detail of how the accounts have to be prepared and scrutinised. They set out the type of accounts that need to be prepared and the scrutiny requirements for charities that meet different criteria. The last item here is the charities SORP. That's the Statement of Recommended Practice. And that sets out specific requirements for charities that are preparing fully accrued accounts. That type of accounts has to be prepared by all charities that are also companies, as well as all charities that have an income of £250,000 or more. Now, a couple of other things to say here in terms of legislative requirements, and certainly this has been a question that a few of you have asked in advance of today's session. The audit threshold has recently been increased for charities in Scotland. For accounting periods starting on or after the 1st of January 2026, this has been increased from £500,000 up to £1 million. And that will mean that many more charities are able to take advantage of the independent examination regime as a result. So moving on then to look at the two different types of accounts that I mentioned earlier. So firstly, we have receipts and payments accounts. These are a simple form of accounting and they're prepared on a cash basis. They reflect the cash transactions in and out of the charity for the year. And receipts and payments accounts can be prepared by charities with an income of less than £250,000 unless the charity is a company, in which case it has to prepare fully accrued accounts. Fully accrued accounts are a more complex form of accounting and they take account of timing differences in accounting transactions. They also include adjustments for amounts that are due to be paid and received by the charity at the end of the accounting period. All charities that are preparing fully accrued accounts have to ensure that they meet the requirements of the charity SORP. Now, where fully accrued accounts are prepared, then they have to be examined by a qualified independent examiner, regardless of the income level. So broadly speaking, what that means is that you have to use an independent examiner who is a qualified accountant if you're having fully accrued accounts prepared. The accountant who independently examines the accounts will be able to help you if you need that assistance in ensuring that your accounts are presented in the correct format and they meet the requirements of the charity SORP. But for the purposes of today's webinar, largely what we're going to focus on is the preparation of receipts and payments accounts because most smaller charities are eligible to prepare those and they choose to prepare those. Now, in addition to thinking about what do the accounting regulations actually say about what you need to do in terms of preparing your accounts, you also need to bear in mind what does your charity's governing documents say about this. For some charities, it might not say anything at all, but for other charities, it might have some quite detailed requirements. The governing document of the charity, now you might call it your constitution, you might call it your governing document. For a company, you might call it your memorandum and articles of association. It can be called different things, but we'll talk about your governing document as a broad term. It sets out the rules that your charity must follow. And if there are requirements in the governing document that exceed the requirements that are set out in legislation for your accounts, then the requirements in the governing document are the ones that have to be followed, regardless of the income or the legal form of the charity. So let's think about an example. Sometimes a governing document will require fully accrued accounts to be prepared, where otherwise the income level of the charity would allow it to prepare receipts and payments accounts. What that means is fully accrued accounts have to be prepared because that's what the governing document requires. Some older governing documents that we sometimes see will refer to the charity having a balance sheet or a profit and loss account as part of its accounts. And both of those terms mean that fully accrued accounts have to be prepared by the charity. Many older governing documents also talk about accounts being audited or auditors being appointed. And when those kind of terms are used, a charity must have their accounts fully audited, even where otherwise they would be eligible to have them independently examined. Governing documents also might have a specific financial year-end date which the charity has to use. And if that is stated, then the accounts must be made up to that date. It's really important, I can't overemphasize this enough, it's really important for trustees to ensure that they're really familiar with the terms of their governing document and that they understand the impact of what the governing document says. And that applies no matter whether we're talking about requirements to do with accounts or other matters such as how trustee meetings are held. If the governing document is out of date and means, for example, that the charity needs to have its accounts prepared on a fully accrued basis instead of receipts and payments, or an audit instead of independent examination, the trustees might then actually want to consider changing the governing document. Now, most governing documents themselves will actually set out the process by which it can actually be changed, and that process again has to be followed if you're trying to make a change. That would allow the governing document to be updated to ensure that it contains suitable requirements for the charity. And ideally, there should be some flexibility in the governing document to allow the trustees a choice in actually what is prepared for the charity for its accounts. A small reminder also that if a charity's governing document is changed in this way, to change, for example, the requirement for fully accrued accounts instead of receipts and payments accounts, that requires you to send a notification to OSCR of that change once it's made. It's not a change that would require OSCR's prior consent, but you do need to notify us of the change once you've made it. So, as we touched on earlier, receipts and payments accounts can be prepared by all non-company charities where their gross annual income is less than £250,000 and where there's no requirement within the charity's governing document or by funders or the trustees have made a decision to prepare fully accrued accounts. So, as we said earlier, receipts and payments accounts, they're intended to be a simpler form of accounts for smaller charities. They show that the money has been received by the charity and what it has spent during the year through their bank and cash accounts. And although these are a simpler form of accounts, they must still give enough detail to enable somebody else who's reading those accounts to get an appreciation of the transaction of the charity for that year. So they'll include a number of elements here. They'll include a trustee's annual report that provides narrative information about the charity. They'll include a statement of receipts and payments, and that provides an analysis of the monies that have been received and paid out during the year. They'll have a statement of balances, and that shows the financial position of the charity at the year end. There are required notes to the accounts. They expand on or they explain a bit more about the information that's in the statement of receipts and payments and the statement of balances. And then there's an external scrutiny report. And more often than not, for receipts and payments accounts, that'll be the report from an independent examiner. Now, in receipts and payments accounts, the statement of balances and the trustee's annual report, they have to be signed by one of the trustees on behalf of all of the trustees, and they have to specify the date on which they were approved as well. So what we're going to do in the next part of this session is to look at some of these elements in more detail. So I'm going to cover firstly looking at the trustee's annual report, and then I'm going to hand over to Claire to take us through the others. Okay, so why is the trustee's annual report important? Well, firstly, it's a legal requirement. So trustees have to ensure that they include a trustee's annual report within their accounts to make sure they're meeting their duties in accordance with the law. But there's more than that. As well as being a duty, it's the trustees, I would say, opportunity to tell the story of the charity. and to help that those reading the annual report and the accounts and those people who have an interest in finding out a bit more about the charity to understand how it really operates. So the narrative part of the annual report and the accounts should help to explain what the numbers in the financial statements actually mean. And that enables readers to then understand how the numerical information relates to the activities of the charity. The report allows the charity to explain the activities that it's been undertaking during the year and how those activities have helped the charity to achieve the very purposes for which it was set up originally. It really also helps charity trustees to be accountable for the money that they've received in terms of public donations, fundraising campaigns, and grants that they've received to show the difference that they've been able to make as a result of receiving those funds. Now, the charity trustees are ultimately responsible for preparing the trustees' annual report. They're the people who are in management and control of the charity. They're the people who are best placed to understand the achievements and the activities over the year. Trustees can, of course, get help from the charity staff or from professional advisors in actually preparing and drafting the report. But the trustees fundamentally are the people who approve the report, and they retain the ultimate responsibility for its content. Now, the 2006 regulations that we talked about earlier, they set out really specific requirements for the contents of a trustee's annual report when you're preparing receipts and payments accounts. So I'm going to talk just briefly through these. The report should contain details of trustees who served during the year. So that includes trustees who served at the date that the annual report is actually approved and signed off, as well as anybody else who had been a trustee during the year but might have resigned during the year for whatever reason. It should contain details of how the charity is constituted. So, for example, is the charity perhaps a company? Is it a trust? Is it an unincorporated association? Or a SCIO, a Scottish Charitable Incorporated Organisation? It should explain that and include the organisational structure and details of any relationships to other bodies, such as maybe an affiliation to an umbrella group that it might have. The report should also contain details about the purposes of the charity as set out in its governing document. Again, this underlines the importance of really understanding what your governing document actually says. Then there should actually be a summary of the main activities and the achievements of the charity in the financial year. And that will then explain how those activities further the charity's purposes and deliver public benefit. So at a practical level, what I would encourage trustees to think about in this space is, what did the charity do? What did it achieve? And what difference does it make? That's really what you're trying to explain in telling the story about what's happened during the year. There should also be a description of how the charity trustees are recruited and how they're appointed, again, because many people will have an interest in this. The report also needs to include information about the level of reserves held by the charity and why those reserves are held. So talking about the policy that the charity has here and how it's doing in line with that policy. If the charity's incurred a deficit during the year, so that means it has spent more than it has received in terms of money, then there should be an explanation of how that happened and the measures that have been taken, if required, to rectify that position. And also, many charities benefit from services or facilities which are actually donated to the charity. They won't necessarily appear in the receipts and payments accounts, but information about the value of those donated services or facilities will help people who are reading those accounts to understand the value that's been contributed to the charity for the trustees to use in delivering on the charity's purposes. Now, I'm going to hand over to Claire to take us through the rest of the content of receipts and payments accounts, and to talk also about the changes that are coming up in terms of information that will be published by OSCR about charities very soon. Claire, it's over to you.
Thanks, Laura. Can you move on the slide to the next one, please?
I will.
Thank you. So the Statement of Receipts and Payments provides an analysis of the incoming and outgoing cash and bank transactions for the year, and then it shows a resulting surplus or deficit. The statement must only include items which are through the bank and cash accounts in the financial period. So no adjustments are made for the timing of the receipts and payments. So for example, if rent is paid just before the financial year, it's recorded in the year it was paid, even though it would relate mostly to the following year. Any purchase or sales of assets are recorded as receipts and payments in the year that they happen, and the assets themselves are then listed on the statement of balances in the accounts for information purposes. The different types of funds held by the charity are shown separately, and the statement must distinguish between unrestricted and restricted funds as well as endowment funds. And we did get a question in advance of the seminar just asking about the classification of those funds, so just to go through those. Unrestricted income is where a charity can freely spend on its charitable purposes. So there's no restrictions over what they can spend the money on as long as it's in relation to their charitable purposes. Restricted funds are those where there may be a specific requirement as to what the funds are spent on. So many times when you apply for a grant and receive it, you will ask for money for a certain purpose, and that would be a restricted fund, and you must spend the money on that purpose. And then you must ensure that you keep records around your spending to ensure that you've got an adequate record of how you've spent those restricted funds, to be able to present that in your accounts, but also to be able to report that back to the funder. You should also remember that if you raise funds for a specific purpose and you state that on your fundraising, so if, for example, you were to say we're raising funds to support a new church roof or to support an extension to our building, then that would be restricted funding. So it doesn't need to be provided to you in the form of a grant, it can be your own fundraising as well. And then to show these funds clearly, each fund normally has its own column in the account. So you would have a column for restricted and unrestricted funds. If there's multiple restricted funds, those would be grouped together in that column on the statement of receipts and payments accounts with the totals shown, and then the notes would explain a bit more detail about each fund. And to allow comparisons to be made, all the figures in the accounts must include the corresponding amount for the previous year. Could I have the next slide, Laura? And so, as well as the statement of receipts and payments accounts, the accounts must contain a statement of balances. And the statement of balances must include a reconciliation of the cash and bank balances. So this will show the opening bank and cash position, the surplus or deficit for the year, and the closing bank and cash position. The surplus or deficit in the statement of balances must be the same as that shown on the receipts and payments account. So that's how you know that those two parts of the accounts balance, because that same figure is used. The statement of balances should also include a note of any other assets held by the charity. So this would include things like property, any machinery you had, or any investments. And there should also be an estimate of any amounts due to be paid by the charity at the year end and any money that's due to be received in at the year end. This information will just help people understand the overall financial position of the charity, not just what's held in the bank. When you're including assets such as property, fixed assets, you should include the cost of that asset and a current value if that's available. You don't need to apply depreciation necessarily to the asset, but that could be helpful in establishing a current value, and then that would be clearer to the user of the accounts what that current value of the asset is. And if a charity has donated or heritage assets, then they should use an estimate value if they've not got an up-to-date value. And you might want to consider looking at insurance values and things like that if you don't have a cost for those assets. And as with the statement of receipts and payments account, the statement of balances must also distinguish between restricted and unrestricted funds, as well as any endowment funds held by the charity. Comparative information is also required on the statement of balances, and this also provides a check on the closing cash and bank balance from the previous year, showing it's been carried forward to the current year, and that helps to ensure that there's not any errors in the accounts. Thank you, Laura. The notes to the accounts are a really important part of the accounts. They expand on and explain the information which is contained in both the receipts and payments accounts and the statement of balances. So the notes on the accounts must contain certain information. And the first thing that it must contain is any trustee remuneration which has been paid to a charity trustee or a person connected to a charity trustee. Not all trustees are paid remuneration, and if that is the case and there has been no remuneration paid, then that must also be clearly stated. So there must be a note either way. The total amount of expenses paid to a charity trustee and the number of charity trustees receiving expenses must also be stated. And again, if there were no expenses paid, then this should be noted as well. The notes must include details about the nature and the purpose of the different funds held by the charities and any restrictions on their use. So if you've got various different restricted funds, you would have a note that would show the opening balances and movements on each of those funds and just explain a little bit about what those funds were received for and how they're being used. And there should be detail of the number and amount of grants paid out by the charity if it's a grant-making charity. The type of activity or project supported by these grants should be noted and whether they are paid out to an individual or organisation. Now, just for clarification, you do not need to name the individual in this. You can just state that you've paid out grants to an individual. There should then be a note which we call the related party transactions note, which explains any transactions between the charity and any charity trustee or person connected to a charity trustee. So, for example, if a charity trustee has purchased an asset from the charity, or a charity has paid a firm which is connected to a trustee for professional advice, then this would need to be noted in the accounts. And this note must include the nature of the relationship, the nature and the amount of the transaction, and any outstanding balances at the end of the financial year. Overall, the note should also include any further information which is reasonably required to assist the reader to understand the accounts. So if you've had any unusual transactions or anything that you think is worthwhile sharing more information about, then it's helpful to include a note to the accounts on this. Next slide, thank you. So all charities must have their accounts externally scrutinised each year. And the aim of this external scrutiny is to give a degree of confidence in the words and figures presented in the accounts and to confirm that they have been prepared in accordance with the accounting regulations. The review must be carried out by somebody independent of the charity, and they must then produce a report which confirms that they have examined the accounts in accordance with the relevant legislation. And there are two forms of external scrutiny: independent examination and audit. Independent examination is a form of scrutiny which has been specifically designed for smaller charities. The independent examination of receipts and payments accounts must be carried out by someone who's independent of the management and administration of the charity, and who the trustees believe has the required skills and experience to carry out such examination. This does not necessarily have to be a qualified accountant when it's receipts and payments accounts, but it should be someone who has enough financial knowledge to be able to understand the accounts as they're presented, and also have some degree of knowledge around charity accounting particularly. In deciding who has the required skills, the charity trustees would need to take into account the complexity of the charity's accounts. So some charities will be very straightforward with very minimal transactions, whereas some, even preparing receipts and payments accounts, might have staff, might have property transactions, and may be completely more complex. So the trustees need to consider the complexity, and that will determine the experience that the independent examiner will require. An independent examiner should review the accounting records which are kept by the charity and compare those accounts with the records that they've been used. Following their review, they should prepare a report which provides the information required by the 2006 regulations and provides an assurance as to whether or not anything has been found that needs to be brought to the attention of the readers of the accounts. The independent examiner's report must be submitted along with the accounts. And another question we were asked before today was around a register of independent examiners and whether OSCR maintains a register. We don't maintain a register of independent examiners, and the rationale for this is it wouldn't be appropriate for us to do so. We are the charity regulator and we don't have the capacity or the resources to be able to go and check every independent examiner has the knowledge and skills required to be able to undertake that work. So it really is up to the charity trustees to identify a suitable independent examiner. And there are agencies who can support with finding an independent examiner, such as local third sector interfaces, and look at local accountancy firms and things as well. And next slide, please, Lois. So if you require some help to get your receipts and payments right, there are various resources that are available to you. We have produced a receipts and payments accounts work pack on our website, which includes guidance and templates that can be used in the preparation of the receipts and payments accounts. So if you don't want to design your own annual accounts, you can enter the information directly onto the forms from the work pack. And if you do want to produce your own accounts, then you could also use this as a checklist just to make sure you've included all the relevant information. The charity accounting section on the OSCR website has information and guidance on how to prepare charity accounts and how to make sure they're properly scrutinised. And as I said, you can get further support from your local third sector interfaces, which are local organisations offering support to voluntary organisations. There is also the Scottish Council for Voluntary Organisations, SCVO, which is a membership organisation for Scotland's charities and voluntary organisations, and they should also be able to either support with your accounts or signpost you to somebody who can. If your charity is part of an umbrella organisation, such as Early Years Scotland or Girl Guiding Scotland, for example, they might be able to offer support, and I know that some of the umbrella organisations also offer templates that you can use as well. And your independent examiner should be able to give you support to get your accounts right, to make sure they're in the right format and that the content is compliant with the legal requirements. So having covered the requirements for preparing and submitting charity accounts, we'll now look at the new information which OSCR will begin publishing on the Scottish Charity Register. And this will start happening from the 9th of March, so next Monday we will start to publish more information on our register. This change was introduced by new legislation. The Charities Regulation and Administration Scotland Act 2023 made a number of changes to charity law in Scotland, and this is the final part of the legislation now being commenced, which is the requirement for OSCR to publish some additional information. So we will publish the first and last names for charity trustees on the register entry. We will not publish any of the other details that we're collecting that Laura explained earlier about. It will only be the charity's trustee's name which will be published. And we're also using this opportunity to include some additional information on the Scottish Charity Register. And this is to aid transparency and allow the public to understand a little bit more about the charities that they're looking at. So the additional information that we will be publishing is the number of charity trustees, the number of staff members, and the number of volunteers, although the volunteer numbers are in bands, so 1 to 50, 50 to 100, etc. We are also publishing the description that the charity provides us with of the activities that they're undertaking. So we now ask charities to explain to us in their own words on the annual return what activities the charity is undertaking, and that explanation will be published. So this just means that members of the public will be able to better understand exactly what it is that a local charity is doing. So in a moment, I will show you a mock-up of what the register will look like with this information included. But before that, I'll just explain a bit about the exemption process for trustee names. So we will not publish the name of any person for whom we've granted an exemption. And an exemption can be granted when the safety or security of a person or premises would be jeopardised if their name was to be published. So when you enter a charity trustee in OSCR Online, the user is asked if that person intends to apply for an exemption, and they will then have 28 days to submit an application to us if they intend to do so. And the application is separate from the entry in OSCR Online. And the reason for this is because the applicant may have sensitive information that they do not wish to share with the OSCR Online user and that they wish to tell us about separately. It allows them the space and the privacy to communicate this information to OSCR. And what do we need the applicant to tell us? Well, we need them to tell us enough information to allow us to understand why the charity trustee's safety or security would be jeopardised by the inclusion of their name on the register. But we don't need details of traumatic or difficult events. We understand that that could be really difficult for somebody to communicate. So it's only enough information to allow us to understand the context. And when we receive an application, we will ensure that nothing is published until we've reached a decision and communicated that decision appropriately. Next slide, please, thanks. So this slide shows how the information will be presented on the register entry. And you can see with the test charity how the charity trustee names will be displayed, with only the first and last name of the charity trustees being displayed and no other information. If someone has an exemption, their name will simply not appear on the entry. And there's a note on each register entry to explain that sometimes the number of charity trustees may not correlate with the number of names because there have been exemptions granted. And this next slide shows how the other information will be displayed. You can see the section at the top, what the charity is set up to do and how it does this. where the charity explains in their own words the activities they're undertaking. So you should give this some consideration when you're filling out your OSCR Online annual return, because it will help funders and beneficiaries to better understand what your charity does. And you can also see the staff numbers, charity trustee number, and then the number of volunteers clearly displayed on the register entry. And the final area I want to speak about is the publication of charity accounts. So from the 9th of March, we will begin publishing accounts for all charities on the register. We will publish any accounts which we receive on or after that date, regardless of which reporting period they relate to. But we will not be publishing any older accounts retrospectively. So publishing will start on the 9th of March, and anything received on or after that date will be published. We will build up a publication database where we show 5 most recent financial years of charities accounts. So as we go through the publication process, we will start to build up 5 years of publication. And we will publish the accounts exactly as you send them to us, without any redactions or any checking by us. The responsibility rests with the charity to ensure that the accounts are ready for publication and that they have the necessary consents for any personal data which is contained within those accounts. So you should consider carefully what information you want to include, particularly names or photographs or other information that might identify children or vulnerable beneficiaries. And as I said earlier, if you're a grant-giving charity, you do not need to name the individuals who receive the grants in the notes to your accounts, and you might want to reconsider if you do that. The Trustees' annual report must include the name of the charity trustees, and this will be published as part of the accounts. However, if a trustee has been granted an exemption from their name being published on the register, then that exemption automatically carries through to the accounts as well. It is, however, the charity's responsibility to omit the name from the accounts. Again, OSCR will not be undertaking detailed checks on this, and we will not be removing the names. So if your charity trustee has an exemption from their name being published, you must ensure that you remove it from the accounts before you submit them to us. When you submit your OSCR online annual return, it will pop up with a warning if the trustee does have an exemption. So that should remind you just to go ahead and have a check of that. The independent examiner's name and contact address does need to be included as part of the legislative requirements, and this information will then be published on the OSCR website as part of the accounts. So it's really important that your independent examiner, particularly if they're acting in a voluntary capacity, understands that their name and address will now be published as part of the accounts. We will accept typed or electronic signatures in the accounts, and we would actually recommend that you use this to make sure your signatures are secure rather than having wet signatures on the accounts. And for clarity, we do not expect charities to be redacting any information from the accounts which they submit. The information which is required by legislation should be included in the accounts, and any other information that you want to include, you should obtain the necessary permissions to do so rather than redacting information. We would also ask charities to really carefully check what you upload to OSCR Online. We have had charities who upload bank account information rather than accounts, and we've also had charities who've uploaded things by mistake which have been unconnected to their charity accounts. So it's really important that you just double check before you upload. We can remove something if it's accidentally uploaded. So I would say again, once you've uploaded, check your register entry once it's updated and make sure you've uploaded the correct information. If you've uploaded something in error, then please do contact us and we can go ahead and make sure that that is removed. And that is all I had to say on the publication of accounts. So if anybody has any questions that have not already been answered in the chat, I would be happy to take them, or Laura will take them.
Claire, thank you very much indeed. Okay, let's stop sharing the slides. There we are. Okay, so I haven't been able to see anybody's questions while I've been busy screen sharing. So let me try and catch up with some of the Q&A that we might have here to see what we've got. Let's have a little bit of a look. And I'm sure Alison's been beavering away answering many of your questions that you've asked here as well. Alison, any sort of common themes or ones perhaps that we need to have a bit of discussion around?
There's one there that I haven't answered yet. Is about whether the independent examiner can use the charity address instead of their home address.
Yeah, I see that. That's quite an interesting. Go on, Claire. I was going to say it's quite an interesting question, actually. Do you want to?
Yeah, we have looked at that, and unfortunately, no, they cannot use charity address. The way the legislation is written, there needs to be an address that the independent examiner could be contacted at separately from the charity. So if they use the charity address, that would not enable us to do that. So it does need to be their home address, or if they have an office address could be used.
Thanks, Claire. Okay. Let's see what else we've got here in terms of maybe questions that we could still do with answering. There's a question here about the number of volunteers that we collect via the annual return, and it says, do part-time volunteers count as one, regardless of how much time they volunteer? And we certainly do have some quite good guidance that accompanies that question on the annual return. But any other reflections you want to add on that, Claire?
And when we looked at this, when we were developing the question, I think we came to the conclusion that really it was for charities to work out the best way for them to record their own volunteers. So we want it to be as simple and as easy for the charities to do so as possible. It's just to give us an idea of how many volunteers a charity has. So just whatever works for you really is the answer to that, to be able to record your volunteers, as long as it's consistent for year on year and you have some record of how you've calculated it. Please just use whatever is the easiest way to work that out for yourselves.
Absolutely, yes. Okay. I can see we do have a couple of hands up, but can I ask anybody that wants to ask a question, please just pop that in the Q&A function. That will make trying to understand those and respond to those a bit easier with the format that we've got of this event today. Alison, you've been very studious in answering so many of these. I'm trying to see what else we've got left.
There's a question about whether there's a template wording for the independent examiner's report.
There certainly is, as part of the Receipts and Payments work pack, there is a template in there for an independent examiner's report, but we do also have guidance for independent examiners that provides alternative wording if perhaps the independent examiner needs to provide some form of qualification on their report due to perhaps an issue that they have identified in the course of their work. So again, we can provide a link to that on our website for any independent examiners that are perhaps looking for a little bit more guidance.
We've also got endowment funds were mentioned in passing, but no information given on how these differ from unrestricted and restricted funds.
Okay. Claire, would you like to pick that up since you talked about the different types of funds at all?
Yeah, an endowment fund is one where the charity can only use the income on that fund. So it's a capital fund. It's generally something that's left in a legacy, not always, but it's generally something that's left in a legacy in the form of investments, and the charity can only use the income that arises on that fund.
Okay, that's grand. There's a question I can see there. Somebody's asked about, is it necessary to put who is chair or vice chair on the OSCR online website? Within your trustees annual report and your accounts, it's often helpful to note the different positions that a trustee will hold, such as a chair, vice chair, treasurer, etc. But you don't need to provide that information separately to us for inclusion on our website or on your register entry. So hopefully that responds to that one there. I can see there's another question here about in relation to staff numbers, is that employees within the UK? It's not necessarily limited to just people who are employed within the UK. It's about who is actually employed by the charity, regardless of where they're actually carrying out their paid employment. I'm really enjoying seeing so many of the different types of questions that you've all got. And as I say, apologies if we perhaps don't get to everybody's question, but we've got a few more minutes left. So let's see what else we can do here. There's a question I can see there about whether we're also publishing the names of volunteers and staff that a charity has? No, is the simple answer to that. It's just the names of charity trustees that we are going to be publishing. We won't be collecting information about who your volunteers and your staff actually are, so we wouldn't be publishing that information.
There's one there, I'll just pick up on about unrestricted funds, internal decisions to ring fence money for projects. And the person who's putting the question has put which an organisation is concerned as restricted funds. That's actually what we would refer to as a designated fund. So it's not got an external restriction on it. It's one that, as you say, the trustees have chosen to ring fence. So that would be recorded within the charity's unrestricted funds, but you could show separately a designated fund and just a note to explain why you're keeping that money ring fenced and what you're ring fencing it for.
Thanks, Claire. I can see there's a question here also about if assets have not previously been included in the accounts, including them for the first time will create a mismatch, and asking if we have any advice about that. So I think the best advice that we can give in that situation is if you've identified assets that your charity owns that haven't previously been included, you do certainly need to include those in your accounts going forward. You perhaps will want to discuss with your independent examiner about the implications of doing so, because, for example, if you're preparing fully accrued accounts, that might require a prior year adjustment to your accounts. So my best advice there would be have a discussion with your independent examiner, but certainly they do need to be included going forward. The other advice I would probably give there is to provide a bit of explanation, perhaps either within the notes to the accounts or the trustees' annual report, about why those assets haven't been included previously, or the fact that they are simply being included for the first time now, because again, that will allow a reader of your accounts to understand what is going on and why the position now looks different. Okay, let's see if we can maybe take one or two more, because I'm conscious we've got about 5 minutes left, and I'm sure many of you will have things to get on with, particularly at 2 o'clock. So let's see if we can find a couple more.
Laura, we have one. It says we have trustees on our accounts that have left prior to the publication regulations coming into effect. If they require an exemption, how can this be done prior to submission by the end of April, which is their time to submit?
Wait a minute, I'm trying to find that question so I can see that. I've got it. I can see it now. No, it's fine. It's just to make sure we can try and answer it correctly. So trustees on the accounts, so they're included in the accounts, but they've left prior to those regulations coming into effect. If they require an exemption. So I would assume that those individuals have been noted or recorded on our system already as charity trustees, but they'll be sitting as former charity trustees. I'm assuming that is the case, but it may not be. Claire, any sort of thoughts on that, given your particularly heavy involvement in how the system works in that respect?
I think I might like to come back to that. I'd read that one and thought I'd maybe like to reflect on that and come back to that one after the webinar, if that's okay, and just have a think about,
Absolutely, because I was kind of thinking the same. We need to make sure that we're going to give a good, accurate answer to that, given the critical nature of it. So let's come back on that one. Absolutely, good. Okay. I think we're doing not too bad a job of having got through an awful lot of these. Yeah, I think we're pretty much there with answering the majority of these. Yeah, I think we're pretty much there. As I say, Alison, huge thanks for the number of those that you've already picked up on, and all the additional links that you've provided in there to the OSCR website with various pieces of guidance as well. So I am conscious that we're now at 1:57 in the afternoon. So I'd like to sort of wrap us up by saying an immense thanks to everybody that's been kind enough to join us for this session this afternoon. And I really hope that you've either had an answer to the question that perhaps you came with, or you've found something out that perhaps has been puzzling you for a little while, or you've just used it as a really good refresher of some of the basics here. I'd also like to say a very big thank you to my colleagues, Claire and Alison. Claire, your presentation was super as always. Thank you so much for that. Alison, your diligence in answering so many of those questions has been super. And I know that every person that received an answer from you has been very grateful for doing so. So that's absolutely great. As always, everybody, please make good use of all the guidance resources that we've got on the OSCR website, whether it's about accounting matters that you want to find out more about, whether it's about the publication of trustee information or the publication of charity accounts going forward. There's lots of information that you can access from the homepage and using the various menus on the homepage to take you to exactly what it is, hopefully, that you need to find. So let's wrap up and give you a couple minutes back of your afternoon, ready for your 2 o'clock meetings, and thank you all once again. So